In this video, I'll explain the OAS clawback. Now, getting some of these things wrong could mean losing up to $8,000 in 1 year of benefit. So we'll go over the OAS clawback, how it's determined, as well as some tips that may put more dollars in your pocket. I'll quickly review the basics first in case you haven't seen my full video on OAS, which you can watch right here. The OAS is a social assistance payment. It's based on your residency here in Canada and you don't make direct contributions to it, unlike the CPP. The current OAS maximum for January to March of 2023 is $687.56, which can really go a long way if you're not working. This is the maximum amount if you decide to take OAS as soon as 65. This can then be increased by 0.6% every month. If you decide to defer to take your OAS, you can have that extra benefit all the way up to 36% when you reach 70 years old. Now, regardless of what amount you start with your OAS, you will also receive a 10% bump up at age 75. So what is the OAS clawback then? The OAS clawback is a recovery tax. The basic premise has to do with the fact that OAS is a social assistance program. Like, why would you need it if you're already earning such a high income in retirement, if you already have so much money, right? It's easy to think that this should only apply to wealthy individuals. Unfortunately, because of improper planning, even everyday retirees, people who consider themselves to be of modest means, could end up inadvertently triggering the clawback. So this may still apply to you, even if you don't consider yourself wealthy or well off in retirement. As of 2023, the clawback threshold is $86,912 of net income. If net income exceeds that threshold, you will trigger clawback. So once you're in clawback territory, 15% of every dollar beyond this threshold is clawed back until you earn $141,917 of net income. And at that point, OAS will be fully clawed back, fully eliminated. So the formula is simple. It's your net income minus the current threshold and multiply that by 15%. That's how much you'll owe in OAS recovery tax. So how is net income calculated then? Before I continue, net income is not the same as taxable income. It's also not the same as cash flow. Please consider that when you're looking at this. Net income only includes employment income, OAS pensions before adjustments, CPP or QPP benefits if you're in Quebec, other pensions or superannuation. So if you have a defined benefit pension from your old employer or you decide to split pension income with your spouse if they have a defined benefit, that could add into your net income. Taxable amounts for dividends. Let's quickly talk about the taxable amount for dividends. Dividends are tax preferred. However, part of the process for getting that preferential treatment is what's known as a dividend gross up. I'll dive deeper into that when we talk about strategies for reducing clawback, but just know this, even if you receive $10,000 in dividends, that's not actually what's added into your net income. You will add 38% on top of that. So somebody that's receiving $10,000 in dividends will have to add $13,800 into their net income. Further increasing that net income can then reduce your OAS benefits. But it's not just dividends that increase net income. There's also interest or investment income, the taxable portion of capital gains. So if you sold stocks, funds, or real estate that have gone up in value significantly, that will also increase your net income. Rental income, net of expenses, obviously gets added to this. RSP withdrawals, RIF income, and any other business or professional income will be added to your net income when calculating that for your OAS clawback. All of these things can tip you over the clawback threshold. So let's look at a clawback calculation example then. Let's say this year, your net income is $100,000. You are in excess of $13,088. You would then have a total of $1,963.20 as a clawback or recovery tax. The adjustments for the OAS clawbacks go to the following year's OAS entitlement. OAS clawbacks are adjusted from July to June. So this recovery tax is prorated monthly and then taken off your OAS benefits in July of the following year. So whatever your benefit is in July of 2024, that will then be reduced by $163.60. This makes sense if you consider that the CRA doesn't really complete all the tax assessments until May. Effectively, they don't know what kind of income you've earned until you finish filing. So watch out for the year before you retire. This gets a little bit tricky for the very first year you claim OAS. Your clawback from January to June will be based on the preceding complete tax filing year. So if you're retiring right now, for example, and you're thinking about turning on your OAS income, it's January, so they will look at your filing for 2021, not 2022. This could trip you up if you were still working full-time and you earned a high income in 2021. You could wipe out your OAS for the first portion of the year. This is where a little bit of foresight can help. If your income is going to be significantly lower for the benchmark year, you can actually apply for a reduction of OAS clawback. The form is called T1213 OAS. Request to reduce old age security recovery tax at source. If you miss this planning opportunity, there's something worth considering because the OAS clawback works like an installment effectively. If you ultimately overpaid in forms of these clawbacks, that will reduce your tax payable once you finish filing taxes. I hope that this was eye-opening. There's so much misinformation shared about retirement, government pensions, and the OAS clawback. Now, learning about the clawback itself isn't enough. So I've put together a more detailed video of strategies. There's 10 strategies that you can consider with your advisor, which can then reduce your OAS clawback amounts and will put more dollars in your pocket. And you can watch that right here.